All right, welcome. Today I am joined by Mayhem, who goes by it's
Yeah, you're
Markets and
good.
Mayhem. All right, great. Well, welcome, Mayhem. Very excited to have you join me today. He is an absolute wealth of knowledge when it comes to just that markets. Today we're going to be talking about Palantir, a bit of a Q4 preview, into some technicals, but more so starting off with just the current state of Palantir. So we've been following each other on Twitter. I really enjoy a lot of your work, very technical, and I've actually started, and that's on the Twitter side, but I've actually started watching your YouTube as well. So yeah, welcome. Thank you for joining, and very excited to have this conversation. Oh, and just one thing, we're not having the videos on today, so that's not a glitch. We'll just be sharing the technicals and some other stuff along the way to give room there.
Yeah, Jackson, thank you so much for having me on. Really appreciate the opportunity. I've been an admirer of your work for a while. I appreciate all the research that you share with Palantir. I think
Thank
it's
you.
invaluable. I think you have a great presence on Twitter and YouTube. So, really glad to do this collaboration and talk about a company we've both been very interested in for a while.
Yes, totally. All right. Well, unrelated to what we're going to be getting into is someone asked me on Twitter if we could, or if they could see, I guess, some screenshots of the interface. Now, this is from the book titled Palantir Foundry by Use Cases, which was released last August, I believe. I reviewed it on the channel. I'm sure it got lost along the way, but this is just in case anyone was looking for that. I thought I would bring it up real quick. But we were just going to start off with talking about the current state. So we were actually just talking about current news. And of course, coming into the year, there's not going to be a ton of news, but we were just discussing how in 2021, we saw the announcement of Palantir's Foundry 2021 and Foundry or Gotham 2021 launch. And let's see where that actually was here. Yeah, that was actually their first demo day. Here it is. And they call it an inaugural demo day. Now, I'm not sure what inaugural is supposed to mean, but usually it means the first of more to come.
Right.
And yeah, so demo day, January 26th, that day has passed us for this year for 2022. Any thoughts on that, having
Yeah.
not seen one so far for this year?
Yeah, so first I want to say the demo day that they did last year was really impressive. It was one of the reasons that I really got to know more about the company because I felt like they were giving us a sort of inside view of Foundry and Gotham and telling us a lot more about what to expect in the future. So I will say I'm hoping for more. I will admit I was a little bit disappointed by the Hyper Auto demo that they did, which in
Mm,
contrast with the demo day last year, there was like a pretty staggering contrast between the effort put forth. And not to say that it was bad, it just wasn't what I was expecting. And I was really hoping to hear more about this integrative platform that could really tie in CRM and some of these other disparate data silos. And I still think, despite the demo not being the most amazing thing I've ever seen, that HyperAuto itself has a lot of potential. So I'd really like to see Palantir this year, and if any folks in Palantir IR or business development or marketing or otherwise are listening, what investors are talking about to me and what Jackson and I have heard from others is really like we want to see more of a presence. We want to see
yeah.
more of a forward facing, taking control of the narrative, dispelling the myths, but also talking about the strengths because Palantir has a lot of very impressive products from Foundry to Gotham to lesser known ones like Apollo and the aforementioned Hyper Auto. And I think if enterprise decision makers are more aware of the value that those products can create for them and really of Palantir's existence as a commercial offering company because they've been a government contractor for most of their existence, I believe that would help with traction. So I'm really hoping to see more of that this year. I'm not going to rule it out yet. I think that
Yeah.
like you
Yeah.
said, it's early in the year. And so I'm hoping we get a little clarity on the earnings call. Maybe we're going to hear something from them, like an announcement of something subsequent to that. But it is quarter one. This is a really important time of year for corporate budgets to be planned out. And so I'd like to see them make a splash before this quarter ends so that, we could see them be considered for more of the kind of IT investing that's going on this year.
Yeah, definitely. So yeah, that's what I was sort of expecting. And when we didn't see the announcement towards the beginning of January, I was lowering my hopes, so to speak, because it was becoming more and more likely that that was not going to happen this past January. So I do expect something of the sort, because they are always trying to continuously improve their product, and no doubt they have updates to push out on the product side for both Foundry and Gotham. Maybe that has gotten a little sidetracked, but news so far this year is we had news on this is the Hyundai Heavy Industries deal, which is much more of a partnership. There is a little bit of a contract thrown Palantir's way, but this is very interesting. And Mayhem, you said that you wanted to talk about this a little bit because, and my point of view on this is it seems like Palantir is actually working a lot on these partnerships. Now, they talk about strategic partnerships, their SPAC deals, all of those seem to be much more working and going both ways than just Palantir itself getting a contract and getting a deal out of it. Now, I want to get your thoughts on that type of business where these are more so like planting the seed. Like we're going to work together. This is a massive company that literally knows what sort of platform needs to evolve and what it needs to become in the future to help their industry. So yeah, what are your thoughts on these partnerships that may start to have a return on investment well into the future?
I think that what we're looking at is a company that has a long-term strategic vision that is not obsessed about quarter over quarter, that is really focused on what the next 10 years of their existence is going to look like. And
Yeah,
so, the SPAC deals are fascinating because some, obviously some of them aren't going to work. Just like if we're in VCs know
yeah,
like 90% of the money that they put out there is going to just be set on fire. And that's fine because the 10% makes a 1,000% return and more than makes up for it.
mm,
But what Palantir is doing is very much like we saw with some of these other behemoths in their very early days. They said, look, we know that we're going to reach a point in the future where our growth might slow. So let's start planting the seeds for future investments today. Let's also look at synergistic catalysts to other areas that we can benefit from by providing our technology, by providing seed capital, and by getting in at an early stage. So I think that's been part of the investments they've been making, but they've also been making some of these joint ventures. And they have this with the airline industries. It's gone incredibly well. It's been productive to safety. It's been productive to understanding and getting ahead of potential maintenance issues. And it's also been productive to try to make sure that the optimized flight patterns are there so you can get as many
yeah,
planes in the sky as safely as possible. And they've done a great job there. So I think what they're doing with Hyundai Heavy Industries is fascinating to me because, a lot of people, they think of Hyundai and they think car. This is a
yeah,
lot more than just a car. This is talking about, shipbuilding, offshore engineering, energy, industrial machinery. This is going to be a deal that gets Palantir in at that real industrial and materials level, which to me is fascinating because right now that's where we are in the economic cycle. As we talked about macro, that macro that we're in right now is not as favorable to Palantir, but it is really favorable to the types of deals they're making like this. And that's another potential jump-starting catalyst. And, we've been under investing in sort of heavy machinery and industry and other sectors like that in many parts of the world, including Japan, the United States, and Europe for a long time. So to see
mm,
Palantir get involved with a potential renaissance that's just starting there, I think is really exciting. I also think it gives them an opportunity to do one of the things that I think they do best, and that is when Foundry doesn't have a lot of experience with a particular area, they mold it and they build it and they iterate it until it works fluently. And I think this is another area where they're going to be able to do that. And as a result of this partnership, they're going to be able to say, hey, you're running a factory or you're doing refining of resources or you're exploring. We've got product that can help to accelerate that can help to tile your data together, and it's already mature, ready out of the box to use. And so that's the other part that excites me about this is the long-term opportunity with Hyundai, but also the interim opportunity for them to expand into yet another industry and really expand the scope of what Foundry is able to do out of the box.
and what really caught my eye on this announcement, not just the scope and the scale of it itself, but was also the quote here from Alex Karp. Now, he doesn't always actually, if you look at the PR that Palantir puts out on their investors.palantir.com site, it's usually actually Sham or someone else on the business development side. But here we actually have the quote from the CEO himself saying, "We are deeply grateful for the opportunity to partner with a company that is not only a leader among the world's industrial giants, but one whose continued growth and success are critical to our collective welfare and security." Of course, always having that bigger view about the importance and the higher level understanding of what a deal and a partnership like this actually means. But I think it more so signifies is like Karp was the one overseeing this and making it a reality is this partnership and what it represents. So yeah, we have that. I definitely agree with you there on its importance. And we also, just finishing up recapping the news that we've gotten this year so far, 1 month in, was the announcement of this certification program. Right now, it doesn't seem like this is too important, but again, I think this is laying the groundwork for, as have spoken with actually a couple people now, which is CyberFam and CodeStrap, who are developers themselves, on the importance of having a developer community. And I think we even just saw Sham Sankar on, I think it was Yahoo Finance. He was talking about,
we think that the revenue opportunity here is quite large. What AWS was to developers last decade, Foundry really will be to developers this decade.
or comparing AWS and that developer community to what they hope Foundry's developer community will be in the future. So I'm not sure if this is, I mean, of course, it's not the full realization of what they're going for here, but I really think this is a step in the right direction of having someone's understanding of Foundry and their ability to use it being a key linchpin in an organization, especially when you're talking about deploying Foundry throughout an organization. And having this training or whatever, it doesn't seem like it's public yet. Like you and I couldn't just log onto the site and start doing this training. But I really think this is something they should talk about more going into the conference call. One of my questions on Say revolves around this, but I really want to see, is this a part of something bigger? And I personally think it is. But yeah, we've also seen this. Any thoughts on the certification program?
Yeah, absolutely. So I come from a tech background, and one of the things that I noticed when I was looking at Palantir is they didn't have a lot of implementation and maintenance partners out there. And I felt like, okay, well, part of that's probably because, they've got their own teams and they can handle it. But I also said, well, but I'd still like to see them really kind of try to get a larger group of third parties together, not only because it helps with word of mouth, that network effect of saying, hey, an expert is actually recommending this platform and they have experience working with it, but also because I think the more people that are familiar with Foundry and how to use it, the more robust it can become as a platform, both in terms of its usability and the use cases associated therewith, as well as the number of professionals that can just pick up and go with it. And we've seen more and more on job applications on LinkedIn, like, if you're applying, you have to have Foundry experience. So it's really important to see that this is coming out as a certification program. I think it's telling us a very positive sign that Palantir is saying, look, we want, like you said, we want to build this community, but also that we really want to get the word out about what we're doing to the professionals that are going to be doing it on the ground. Because, it's just as important, like we talked about earlier, to talk to the decision makers, the people that control, sort of the executive destiny of the company. But you got to get the IT people on board. They're really a linchpin in that entire process. If they don't know how to use something, the executives might hesitate. So having this program and being able to say, hey, IT guys, whoever is, applicable to this job, we're going to get you certified. We're going to get you familiar right out the box. And then that starts to create that pipeline for careers specific to Foundry. I like it all. I think it's very important. And I would like to see that process continue to develop and be elucidated further as time goes on.
Yeah, excellent. Thank you for the insight there. And I think that also just reminded me of when I was talking with CodeStrap, and he was saying how technical people within an organization will be presented with Foundry or whatever specifically they are going to need to implement, and they'll think, oh, let's just build it ourselves. Like, we're the engineers. This is what we do, right? Is we build these platforms, and even if it's like a much thinner slice of what Foundry would be pitched to this organization, I think having the certification program and just having more education around the platform itself is going to be very important going into the future. And yes, we had that announcement. I'm hoping to hear a lot more on the conference call. And then, of course, we have the conference call itself.
Look, at the end of the day, we need to see this company really reach out to all their core regions. So if they're hiring and they're building teams to have channels where they're getting out business development efforts, marketing and sales efforts, where they're trying to entertain clients and get them on board, I'm all for it. I'm not super familiar with Philippe and his experience and what he brings to the table, but I do believe in the management of Palantir to select the most credible and qualified people to execute these roles. So on the surface, it reads encouraging to me.
Yeah, certainly. I've heard of huge hiring going on. And yeah, I think this all leads into what we have, which is the Q4 earnings release and conference call, as they say it. But even more so, it's actually a video conference. And this is the first time, as everyone probably knows by now, that Alex Karp, CEO, will be present, and he's going to take questions from analysts and shareholders, which I'm guessing the shareholder questions are just going to be those submitted through Say that have been circulating around. That's going to be at 8 a.m. Earnings will probably be around a little after 7, I'm guessing, Eastern time. And this is on February 17th, which is not this Thursday. It's next Thursday. I got that wrong. But yeah, this is very exciting because this is year end for their first full year as a public company, 2021. Alex Karp's going to be there, hopefully conveying confidence and not the opposite of that. I know there's speculation on how it's going to go. But yeah, I'm super excited. Any just high level expectations going into this call? And also, the other thing I'll just say is this is actually not, from what I can tell, this is not an actual like a webinar or whatever companies usually use for the actual link to the conference call. It seems to be just happening on YouTube, which is interesting, but maybe I just got that wrong.
Interesting. Yeah. So what I'm looking for, just from a general earnings perspective, one thing that we saw last call that was concerning to some analysts was they felt like growth in the government side sequentially wasn't so hot. And I know that management at Palantir has said that their government billings can be lumpy. And I mean, that's not unique to them. It happens to a lot of government contractors. Deals just get pipelined. Sometimes they all happen at once. Sometimes they happen with delays and other budgetary issues. So, I'd like to see that pick back up. I'd like to see the quarter and year over year government revenue growth really be nicely in the double digits and back in trend. I'd also like to see more, because we haven't heard a lot of announcements. So I'm a little concerned. I know Palantir can have a lot of clients that they sign on confidentially because of the sensitive nature of their work, and in a variety of industries, not just in the government. In some industries, they might not want to say they're working with Palantir because they think, hey, this is going to give our competitors an advantage. They might work with them too. So I'd like to see more commercial growth. I'd like to see it coming into the impressive trend where it's continuing to grow in terms of, and I'd also like to see a fair amount of new clients actually signed on as a part of that growth. In terms of the conference call itself, I'd really love to hear Alex talk about all these different pieces and how they're going to come together. Foundry, Edge AI, Apollo, Hyper Auto, Gotham, and then also if they have any other new offerings that are in the pipeline. Because he said, when he was doing an interview in Europe several months ago, that they had, I think, 3 new products or 2 new products. We've heard of one of them, and that was Hyper Auto. So I'd really love to know what else is in the pipeline. I'd like to hear a call that is a very big contrast to the last one. I mean, I'll be the first one to admit, I love Palantir's vision. I love their potential, but the last earnings call was not great. And there was too many mentions of things like software shamans and vague concepts and grand ideas. And that's great and all, but we want the nitty gritty. We want to learn more about the specifics. We want to know the vision. And in particular, we want to have a sense as to what their confidence is about future growth and really how they're going to execute to try to capture this ever increasing market of companies going through data transformation. And so, that digital transformation that's happening right now is one of the biggest drivers of the fourth industrial revolution. Palantir has a big role to play, but the big question we all have as investors is how well are they going to do executing on that role in an increasingly challenging environment? And so I think that's one of the things that we want to hear more from. I'm personally upbeat about hearing that Alex is joining the call. I don't think Alex is going to get on the call and tell us that the sky is falling and we're all going to die. I think he's going to get on the call and really try to, really try to show his passion for what he believes in. We saw that video. I think it was in Japan skiing, and he did this like kind of 5-10 minute clip. He seemed like he was very, very juiced up. And he does bring a lot of passion. And I love Shankar, and I think he's great. But I think Alex is really our Palantir mascot. Like, we really look at him for like the compass of the true north of where the company's going. So I love that he's going to join the call. I see it as a sign that there's something major that's going to be announced. And I think it's going to be a positive rather than negative announcement. That's just kind of my gut feel. Of course, I could be completely wrong. But I mean, one of the reasons I got involved with Palantir as an investment is Alex Karp, his background, Peter Thiel, his background, and also just what the scale of the problems that they're addressing and my confidence that this team can actually address them.
A little table that I was populating earlier, I showed it in a video prior a few weeks back, but onto the revenue and its growth quarter over quarter, we have the revenue in millions, of course, in that column right there, and the percentage change quarter over quarter next to it. I was just looking at the year over year average. So if there were 2 quarters, because we have 2019, 2020, just to get an idea of averaging those, which isn't going to be accurate 100%, of course. And then more importantly, we've got the guidance next to that. And for this quarter, which is what we're most interested in right now, they have guided for $418 million in revenue. Now, usually they are very conservative on their guidance. I think part of that is they have a good idea of what the revenue will look like even before it actually happens because of the structure of their business and the business model itself. So I have full confidence in their ability to give out conservative guidance, as we've seen historically for these 4 quarters prior. And we actually saw even if you just look to the column to the right, a surprise on top of that guidance of 7% for the last Q4, 3% for Q1, and 4%, 2%. And what I would love to see, best case, would be actually somewhere up to around in the 440s. I think that would be absolute best case for revenue for Q4, considering how they're guiding for 418 million. I think that 420 area, I think, is pretty much guaranteed if you just see their prior guidance as we're looking at and how it actually turns out over time. But yeah, I just wanted to show this. This is where I got the info. This is the Bloomberg layout of that. I just put it into my table. So here's what I'm looking at. I just put stock reaction with the implied move, which is completely random and very much of a guess. But I think worst case, they would come in line with their guidance. Now, I don't expect that to happen. I think base case, probably more probable, would be around that $435 million. And best case, I don't really see them coming in any higher than 450. But yeah, I'm looking for somewhere around 435 and maybe even into 440s. What are your thoughts, or do you just completely just wait for the earnings and then see the numbers?
Well, I think it's really important to know what the expectations are in the street. So I'm glad you outlined that. And I come into a similar point of view. I mean, I think 440 is my base number in terms of a positive outcome. I think that one of the things that's very interesting about Palantir is they actually eat their own cooking. They use Foundry for all their accounting and billing and just like everything. So I think if any company has a really good idea of being able to model for future revenue, Palantir is probably pretty on top of that. So I think you're spot on there. And I'm looking for a beat, and I'm looking for a pretty strongly bullish guide too. We're in a market also where, as you've seen with some of these earnings, like if a company doesn't come in and really handily beat both the expectations for the current quarter and the projections for the future quarter and year, that they get punished pretty brutally. And we're also in a sort of macro backdrop, mid to late cycle, that higher growth companies with more generous price sales multiples just have seen a lot of discounting, and Palantir's been no exception to that. So I think that the expectations are going to be pretty high, but this is also a company that's been so thoroughly discounted that if they do beat, I could easily see them moving up 10-15% in a day. And as we've seen in some of these other earnings where they give a pretty positive guide, and like May, for example, you could see a meaningful bottom made and a generous move higher if indeed they come in well above what the market is looking for. So that would be my hope. If you want, we could flash over the chart and we could talk a little bit about some of the levels here that I'm watching too.
I think you're spot on with guidance being very important. And we can move to that in just a moment. But
sure.
The sort of, I'm not following all of these companies that have reported earnings, but just seeing the headlines and seeing the stocks, it seems like guidance has been the main driver of actually the declines. And it seems like Palantir actually likes to keep it fairly light on the guidance. And they're really only long-term guide at this point, which I would love for them to add to, is that revenue growth through 2025. So we're talking quarter over quarter here. But if Karp is on the call, and he's going to be, I would love to see just more long-term guidance, and even, as you're saying, guidance for the year or whatever it may be, because I think that's helpful for investors, especially in this environment. And so what they're guiding for this quarter is actually 8.6 quarter over quarter percent growth, which would be on top of Q4 last year, about 30%. So just looking at that 30%, it's, yeah, I think that is, again, their guidance. It would be what the market is looking for, especially for Palantir, knowing what they're capable of. So yeah, you just brought up this chart. This is, it looks like, for the entire existence of Palantir. So
Pretty
yeah,
much.
walk us through what's going on, what you're seeing from a technical side of things.
Yeah, absolutely. Happy to do that.
Thank you.
So we've had a pretty rough and tumble ride here from, a DPO of just under $10 in that range of like $9 or so, all the way up to the, about a spike up to 45 during that February euphoria of peak central bank liquidity velocity. And then since then, it's sort of sideways chop all the way till November. And then when those earnings came out, the market wasn't too happy with the earnings of the conference call, and Palantir's, and then also the broader market really started to deteriorate even further for growth stocks. So Palantir's really been in a downtrend, and it's been chopped in half since then. But it does seem to be potentially trying to find some support around this 1244 level. So I'm going to be watching that level very carefully as we get into next week and the week ahead. For me, on a technical basis, we need to see a reversal for me to be confident about, adding to any position in Palantir here. I think earnings are going to be critical, as well as guidance and subsequent announcements of any marketing endeavors and deals for the sentiment around the stock. I mean, people are really looking for something to hang their hat on. A lot of people are looking at Palantir as a show me story right now. They really want to see that growth story be proven. And so we're at a precarious level in the chart because, of course, if we do break meaningfully below, it looks like we're going to retest some of these lows and potentially even retest that post DPO range, which does go below $10. On the other side of that, however, if we do get a nice little move and we have like a nice strong volume close above, say, 1430, then we're starting to put in what looks like a double bottom here, and that could easily give us an interim upside target of just under $16, around 1597. And once we get to that kind of price action where you see a reversal in place, you could be a little bit more confident that you might have, the path of least resistance being further upside. So you look at the next resistance around 1722. Above that is around 1928. And then above that is around 2098. Those are going to be key levels because they're not just levels that we're looking at in this chart insofar as, areas that have had strong price interaction, but they're also areas of supply and demand that we've seen per volume profile. So, we really want to see, in essence, buyers take control of price. And in order to do that, they need to put in a double bottom, which means we need a positive event catalyst through those earnings guidance and subsequent events to come. And then I think we could see a turnaround here. The other side, of course, is the risk that earnings doesn't impress and macro continues to deteriorate. And we see some of these things really continue to move lower here. So at this point, from a technical basis, if you're looking at this from Ichimoku Cloud on a daily time frame, Palantir shares are in a downtrend, and that is because they have closed below the cloud here. So the last time we were in an uptrend was really very briefly in November. We couldn't hold that. We moved below that, and subsequently the path of least resistance has been meaningfully lower. And we see that we're kind of hanging our hat right now on the supply demand zone that's part of this volume bar, which also correlates with the lows that we had tested in January. So that's kind of what I'm looking at. It's not a clear picture. Short term, the path of least resistance could be lower if we take out the support zone. So we really have to see some positive event catalysts. And we also, ideally see that perhaps there's been enough of a washout in some of this higher growth, higher quality, higher growth names that people start to get interested in buying them again. Certainly institutional participation in Palantir has not really ebbed. They're still buying up shares at the institutional level, but because this was a name that had so much retail options participation, and because retail options participation is very, very short-term sentiment driven, that not only exacerbated a lot of the volatility, both up and down, but it's also one of the reasons we're not seeing as much participation right now because, obviously if you're buying those things, you're looking for charts that work in your favor. And this chart's just a very difficult one to get behind in the short term.
Okay, great. Thank you for that rundown. So am I reading this right? We got the volume bars on the left here. It really seems like, the volume has just gotten sucked out of the current price action and where we are. Is that right?
Yeah, so a lot more transactions happened at these higher levels. There's a lot more liquidity exchanged between the 20s and 30s than we've seen in these single digits. And part of it has to do with Palantir really hasn't spent a lot of time down here. And
Yeah.
so, we're going back to like really, levels that we haven't seen since 2020 to look at these price transaction levels. And so the good news is there's not a lot of supply overhead. The bad news is there's not a lot of demand below. So, you know what I mean? We're really kind of, we're on like like a rope bridge. And the good news is we could see the other side. The bad news is that there's a lot of planks missing. We got to be very careful navigating that bridge.
Yeah. The bottom is really given out for Palantir, I guess you could say, because of the macro.
Yeah.
So like with strength into the future potentially, do you expect these types of stocks to just naturally rebound, or do you think some of them would need a lot more of that positive catalyst, as you're saying, as earnings could definitely potentially be? Yeah. Any thoughts on like would macro have to be good for Palantir to really push back higher, in your opinion?
I think Palantir, if they're able to put out really strong earnings and guidance and differentiate themselves from some of the names that are just basically considered unprofitable tech companies, if they're able to show that they've got a differentiated story. We look back last week at the earnings from Bill.com and Unity. These are two companies that I have holdings in that I believe in for the long term. I think they're differentiated players in the high growth space, and they absolutely crushed their earnings, and the stocks were rewarded commensurately. So I think that the big thing here is, we're in a part of the economic cycle where the Fed's tightening, they're removing liquidity from the global financial system. And in that situation, individual company catalysts via earnings matter the most for upward price discovery. So Palantir needs to prove that. If it can, I think they've got all the juice they need for this to turn around and price action to meaningfully improve. On the other side of that, though, if they're not, I think that this could get quite a bit worse in the short term. Overall, the macro picture is challenging and is likely to continue to be challenging because the Federal Reserve seems intent to not just end QE, but also raise rates to probably 100, 125 basis points by the end of the year, and likely engage in QT, which basically means they're actively on two different fronts removing liquidity from the U.S. and global financial system. And it was the surplus of that liquidity that really gave a lot of these things an extended bid. I mean, that February peak, that was when the peak velocity of central bank liquidity was hitting global assets across the board. And as that reversed, we've seen that a lot of those same more speculative assets have been beaten down. So Palantir needs to prove that it is not one of these more speculative assets, essentially, that the growth story is real.
So would you say that the washout, as we've seen, is potentially healthy for the stock going forward? A lot of the speculators, as you were saying, are no longer in it, and this could be a much more healthy run for Palantir into the future.
Yeah. So we've seen, for one thing, going back to institutional involvement, we see that shares are going from weaker hands to the stronger hands, right? That's part of what's happening here. And that's really important because what's happening with the weaker hands is they're capitulating out of emotion. They don't believe in the story anymore because of price action. Price often drives sentiment a lot more than it should, right? If you really do, like for me, the investment thesis is not broken in Palantir. I mean, it's more challenged than it was, but it's not broken. So I still believe in the company for the long term. I've been hedging my exposure by selling calls to fund put spreads so that I can stay in and stem the bleeding. But at the same time, I've reduced my exposure, like in my taxable account. I don't have Palantir. I have it all in my retirement account. And so that's kind of how I've been managing my risk in that. At the same time, though, I like what's happening because I'm all for retail. I'm retail. I can't say I'm better than any other retail, right? We're all retail. You're retail. Everyone listening is probably retail. Maybe we got some institutional guys. Hey, out there, institutional guys. But we're really talking about a situation where we don't want euphoria. We don't want everyone loaded on the boat and crowding onto one side, because if we have that, the room for upward price discovery doesn't exist. Right. And so I like the direction that it's heading. I think you're right. We're de-risking. The other thing is, as we go down in price, the valuation and the possibility of return on investment, it gets a lot more attractive.
Yeah, certainly. So I was going to ask you, but you sort of just covered it on, as a trader and someone very familiar with technicals and sort of what plays out. And I also watched your video, which was about a month ago, on your take on the macro and how this, and you called it 100%, how this is not as good as it may seem, and really the Federal Reserve, the bind they're in, and how difficult, how turbulent everything macro wise is going to be, and it was 1 month ago, and I'm sure it will be well into the future, as you're saying. But when you see something like that play out, if it's technical or if it's more macro that you're able to identify, yeah. So what's your course of action? And on the reverse of that, like, do you go, like, if we're able to see, like, form a steady bottom here, and you actually do see a reversal happening, and the likelihood of that being a pretty high, do you trade more of that, or sort of what's your strategy on balancing more long term? Or what I guess I'm trying to say is, how do you leverage your understanding of the short term to benefit your long term holdings?
I love that question. So I look at three different time frames. I look at intraday, I look at swing, which is usually days to weeks, and I look at investing, which is, these days it's months. It used to be years, but
Yeah.
everything is just moving so quickly. So for me, my basis for anything that I'm getting into on the long side or short side is trying to capture the bulk of the move. Right. So you talked about a bottom. I want to see a quantifiable bottom, which means I want to see a technical reversal. I want to see higher lows and higher highs. I want to see a break above, some of these key areas that we like we're looking at in this chart. Like, for example,
Yeah.
if Palantir broke above 1425 on a nice strong move, weekly close, good volume, I'd be looking to buy some more, because that's telling me
Mhm.
short term, put a trailing stop, maybe 2% in there. And if it gets triggered, I'm out. No harm, no foul, lost a tiny bit of money. If not, I've got a position that I will continue to build into as that reversal strengthens and as it gives me more reason to show conviction. We can see that last week it closed below the 5-day EMA. That's just a little disconcerting because that's a week's worth of trading data. It couldn't even get above that range, but it also was able to stay above some of the levels that it had made lows in January. So this is a stock that's consolidating. It's trying to probably put in a bottom, but it needs a positive event catalyst. So if we saw that technical reversal, in the shorter term, I'd be looking to add shares for the longer term, with the caveat that if that reversal tells me that it's not real, then I'm getting out again of that shorter term position. And that shorter term position, to me, it would be an investment, but shorter term, that is to say, if I'm buying a whole bunch of shares around 15.50, and then adding on as it moves higher, and that's what I like to do. I cut losers, I add to winners.
Mm.
Then I'm going to be looking for it to get back to some of these old highs potentially, and then I'm going to be kind of slowing that position down and probably taking some off and just letting my profits ride in that shorter term reversal play, if that makes sense. And then if it breaks out and it starts to really show some strength above some of those highs from June, July, October, then I'll probably get back in and add more, because we're starting to see the velocity increase and we're starting to see bulls really take control of that price action. So, because things have been so volatile, and because that volatility has been mostly to the downside, I am very, very nimble on positions, both in terms of sizing and time horizon, and how I scale in and out of that risk.
Okay, yeah. And I've seen a lot from you on Twitter, like trying to make sure everyone's protected and not taking huge risks. And I mean, you keep saying it is like about catching the falling knife, which is the imagery. But yeah, so what would you say to someone that wants to sort of buy on the way down instead of potentially seeing a breakout and like showing that, like breaking past a key level, as you were just saying, in the 14 range? So like the difference between like seeing a new low versus seeing the stock move higher to confirm like positive momentum going forward. Like, how would you explain that to someone that just wants to buy it at cheaper prices, right?
I think the biggest thing that I could use to try to explain that would be, what does risk really look like, right? Because a lot of the times we look at risk through various views, and if we don't know what that risk is, it's very hard to quantify whether or not it's worthwhile to take on. And so when I'm talking about that in particular, I'm just going to pop an image here.
Sure.
So this
Cool.
is risk visualized. If you don't have a reversal, it really looks like this or this, because you can't know what the bottom looks like. And the bottom could be just a bunch of very, very nasty price action that takes another 30, 50, percent out of your portfolio's liquidity. And if that's the case, then, oh, geez, that bottom looked really great, but it didn't turn out to be a bottom. And I kept averaging down and averaging down and averaging down. And the
Yeah.
reality is that when the price does begin to turn around the other way, the market's going to give you time. The market's always going to give you time because, nothing like the V-shaped bottom doesn't just play out in a single day, if it even is a V-shaped bottom. And quite frankly, most are not. Most of the time, reversals are something that happen after, periods of consolidation. And then you have like something like this, right? You have a sort of, a price change in momentum. And then you have the sort of downward move, and then you have the consolidation that we're seeing. And if we go back to, Palantir's chart, it's showing us that same kind of potential, right? Yeah, maybe it's starting to consolidate. So if you're looking to buy into dips, my question is why? And what I mean is, how do you know better than anyone else in the market where the bottom is? If we're out at night and we've got a blindfold on too, and we're walking in a ditch, do we know that the ditch isn't going to get deeper? Do we have any sense as to what, where that path goes? So I think for folks that are out there very tempted to just look for the deal, my advice is this. First, you probably already know that doesn't work, because if you've been doing that this year, you've been seeing your portfolio get bled out. So I would say take a step back and ask yourself why you're doing that. Are you doing it because you want your cost basis to go lower? I mean, does that really matter much? Because if the thesis plays out as you think, point of entry is probably not going to be that big of a deal. It just might take a little longer to get where you want to go. On the other side of it, however, if you're concentrating yourself too much in a certain factor, sector, or company, and then that goes against you a lot because you weren't right about the bottom, that can be something that takes months or years to climb out of. So my advice is look for the reversal, because what happens is you're able to quantify your risk. You know where the supposed bottom is. And if it gets taken out, like instead of it being a series of higher lows and higher highs, you get a lower low and a lower high. You say, hey, I'm out. I don't mind being wrong. I'm just not going to stay wrong for long. And then you look for the next opportunity. And I feel like as long as we're not trading with our emotion or investing with our emotion, if we're investing strategically and opportunistically, especially in a year like 2022, we'll probably make it out better. But if we're really just looking to kind of call bottoms, I feel like that's more in a way psychological. It's a little bit more ego driven, like, hey, I'm right. But being right in the markets doesn't really matter. You can be right about Palantir and still be wrong about the price action. So what's really important is just respecting price and time and trend. And when the trend changes, it's going to tell you, and that's the opportunity to hop on.
Great. Do you have any thoughts on ARK Invest? I know more recently, last 6 months or so, we've seen a lot of people betting against and doing successful in that regard. There's SARK, SARK, or whatever you want to call it now, and Kathy Wood's strategy of kind of trying to do what we were just talking about, which is buy the dip, buy the bottom, and catch the falling knife on these more unprofitable companies, and it's been an absolute disaster. But I'm just wondering what your thinking is with ARK Invest, or actually not even just ARK Invest, just that sector or those group of stocks, the growth stocks, the tech stocks that started selling off in advance of the general market. And if you believe there will be that, or that group of companies will actually reverse ahead of the macro, if there is more pain to come. And any thoughts on that and ARK Invest and what they've had to deal with?
Sure. So full disclosure, Matt Tuttle, who invented SARK, is a friend of mine. He's a very smart guy. And I think he launched that thing at like the perfect time. I got to say, I mean, November really it's appreciated a lot since then. I think, first of all, I have to say, I just want to say this first so that anyone listening doesn't think I'm being overly critical. I have a lot of respect for Kathy Wood. I think she's very visionary. I think she's also a great speaker. She's very good about getting people impassioned about the things that she's looking at. I think that her fund still has very impressive returns if you look at when it started versus when everyone started talking about it. But I do get very concerned about what she's buying, why she's buying it, and when she's buying it. I don't think that companies like Zoom or Hood or even Path are going to be great investments over the long term. And it's nothing against the companies themselves. It's just Zoom is a commodity product. Anyone can do video and voice, and Microsoft Teams arguably does it better because they have a more elaborate collaboration platform. Hood is basically the bottom of the barrel in terms of brokers. Anyone that learns anything about markets runs far from Hood. And it's, I'm not judging anyone that uses the platform, but once you learn how limited it is, you go elsewhere because you should. And I feel like she's been making a lot of investments that they're not these leading innovative companies. She got it absolutely 100% right with Tesla, one of her best investments, if not her best investment ever. But I'd like to see more of that mindset, the real disruptors, the companies that are going to come in and shake things up. The other thing, I didn't understand Skills. I never understood Skills. I think the company is quite frankly very, very badly run. I wasn't surprised to see her start to dump out of it, but I wish that there was more cognizance of what they're buying and why, and deeper due diligence, because some of the reports that I see come out just suggest that there's not. And I'm a tech guy. Like, I've been in this space for a very long time and I love it. But I also really have some acumen as to, getting a sense as to the veracity of the research. And some of the research they put out is very good, but some of it is also very questionable. So I'm a little concerned about ARK. I do think that, there's been a big washout. So, those lows that we saw in the 60s, maybe that's a low interim in the interim term. But I want to see Kathy really get the capability to right her ship, to right her ARK. I mean, right now it's got a leak. It's leaking liquidity. I think that they can get ahead of that, but they really need to change the narrative. And part of that starts with what they're investing in and why. And of course, maybe she has a vision and there's things that she's doing and she knows about these companies that I don't know. It's totally possible, but I just haven't been impressed with some of them. On the other side of that, in the greater growth space, we're in a situation where real rates are on the rise, where liquidity conditions are tightening, where inflationary pressure is real, and where the Fed is very actively telegraphing that they're going to pull forward the conclusion of this credit cycle, or at the very least, let a lot of air out of the bubbles that they believe are in the market. And so as long as that backdrop is coming to fruition, as long as the Fed is talking about raising rates, 4 to 5 times, 125 bips this year, that's a concern. But my bigger concern is quantitative tightening and also macro data. So, if they really are intent to do quantitative tightening at a run rate that is actively selling $1 trillion or more off their balance sheet every year, I think we got problems well outside of growth. I think growth will get hit pretty hard potentially, but I think the entire market could go into a bit of a bear or corrective cycle, just because that is the lifeblood of this market since 2009 has been an ever increasing abundance of central bank liquidity with few exceptions. So if they start to pull back that same punch bowl, I think that the entire market could take a pretty significant haircut. And there's a certain pain point, which I've quantified at about 500 bips high yield credit spread. That's basically when you see the credit spread start to really, really ratchet higher, that the Fed gets concerned about the real world economic impacts of that. More unemployment, companies shutting down, greater volatility in all sorts of markets. And then the other side I look at is a 10-year bond. We've been in a sort of 40-year downward trending channel of rates. If we break above 2.4% on the 10-year bond, that will get us back to the sort of peak of that downward trending channel, which other times it has been visited during the COVID correction, the great financial crisis, the dot-com bust. And when you see the convergence of both high credit yields, high spreads on high yield credit, and bumping above that sort of upper trend channel in the downward trending yield of the 10-year bond, that typically signals the Fed's going to pause and start to turn around, put their foot on the brakes on tightening, and maybe even start loosening again. It usually also coincides with really strong volatility in equity markets and some sort of financial or economic issue playing out. So that's kind of what I'm looking at in terms of the Fed, for them to pivot and say, hey, we're gonna stop being more hawkish and start to really turn around and be more accommodative. And in that environment, it's very, very good to be in growth. It's very, very good to be in tech and more speculative assets, because things that are of a longer duration, that don't have near-term free cash flow and profitability, they're more attractive in an environment of real rates that are dropping, and where, when you go into, say, bonds or fixed income, it becomes return-free risk. And so we're emerging. We're kind of the opposite of that. We're in this environment where real yields are going up, where liquidity is tightening, where commodity prices are going higher too, which is probably going to give some more wind to the sails of the Fed wanting to tighten here. And that concerns me a little bit, because as long as that environment is in play, I think that we have more volatility to contend with. Now, you made a very good point. We've had a lot of discounting in this sector going into this. I think a lot of folks were kind of aware that going into the back half of 2021 and 2022, that liquidity conditions were going to tighten more meaningfully. And so there's been a lot of haircutting. The market is forward looking. So will these things turn before the broader macro picture turns? Probably, because the broader bond market and stock market are a little bit separated from the economy, and they're a discounting mechanism for what they see happening in the future. So I think you will see first, a turn in probably the bond market, which would be really lower rates on the longer end of the yield curve and a flattening yield curve. And you'd probably then see, a pivot in the price discovery of some of these things really bottoming out and starting to turn around. So it's a multifaceted picture, but basically sentiment in this space from the macro and kind of factor and sector perspective is really driven by a longer time horizon for risk. And we just don't have that right now with the Fed wanting to pull forward the conclusion of this cycle.
Yeah. Wow. Thank you for sharing all of that. To
Sure.
me, it seems like the uncertainty of what exactly is going to happen, and this is by no means a brilliant insight, but it seems like the uncertainty is what's so troubling. Because
Yes.
if I think my read is that if the market knew exactly what was going to happen, everything would get priced in so quickly that sure there would be like a lot of volatility, but I think there could be a rebound. And I just feel like everything could be compressed
Yes.
into a much shorter time frame if we knew what was going, or if everyone knew what was going to happen. And yeah, it seems like it's a period of discovery because I'm not sure if the Fed even knows what they're going to do. I don't stay fully up to date on that, but it seems like it's all changing in real time here, and that's what's so troubling on the uncertainty side.
Yes.
Yeah, I want to be respectful of your time. I know we're a little over here, but I just wanted to ask you to wrap this up. Did you submit any questions to Palantir? What would you want to ask them? And on this earnings call to get Carp, it sounds like he's going to be the one answering these questions. Yeah, did you submit any questions, or more so, what do you want them to really hit home on this earnings call? What's top of mind for you?
I definitely plan to submit a couple of questions, and I want to ask them, this fits to what we talked about earlier. I want to ask them where their marketing and business development efforts are going to be this year, and if they plan to have any major events to showcase some of their new products and advances in their existing products. I want to ask really what their vision is. They've talked about their growth rate vision. I want to know what their vision is for Foundry over a 10-year time horizon. What do they really want to focus on? What are the industries that are the most pivotal? What, sort of the verticals that they have their eyes on? And then also, I really am interested to know about how they're going to expand their potential for doing these sort of early opportunity investments, because if they're done well, that can be a tremendous growth catalyst for the company. And I think if you look at Alex Karp and Peter Thiel, Alex Karp used to manage a family office and manage other people's money. So he's a very experienced investor. And we all know Peter Thiel is a prolific entrepreneur and investor. So, if any two people could come up with a sort of venture capital arm of Palantir, it would be these two guys. So I really want to hear more about that as well, because that's one thing that's always had me interested and excited about this company. And then, finally, I think I would want to hear just a little bit more about what they want to do with Gotham. Are they going to just sort of keep it as this government-centric platform for just a very small select amount of governments around the world? Or are they going to kind of, over time and validating trust, obviously they're not going to sell to Russia or China, but over time, are they going to start to expand the number of governments they work with that are trusted allies so that platform also has some growth potential? Because if we look out 5 years, if they saturate the government markets they're in now, there's not a lot of growth for Gotham. But if they start to kind of expand out in concentric circles and maybe even redact some of the more sensitive functions of the platform for less trusted governments, and again, not suggesting any nefarious actors, but I do feel like there's a larger market than they're addressing there. So I'd like to know what their vision is for Gotham in the long term as well.
That's an interesting point on the SPACs, because it looks like, only two questions on both of these, the SPACs and the Gotham topic. It's interesting because the SPACs, obviously, just macro and just how they have behaved as publicly traded. I think I was looking at it. I was trying to see if I could figure it out. It looks like Palantir's down about half, which isn't entirely unexpected on their portfolio there. I don't even know if they check their portfolio, but because this is a part of a much broader play. But yeah, I would like to hear more. Like, are they is there a certain number they're looking to get into over time? What's the process there? Are there companies they're working with going at? Yeah, I think it would be great if we could get more analysis there, or not just analysis, but explanation. And then, on Gotham, that'd be great as well. My concern is we've got 623 questions. It looks like 6,000 people participating, which is great. But a lot of these questions are not that are towards the top are not really hitting on those more important ideas of the core business,
Right.
which of course you'll have that with retail investors. But yeah, I'm hoping that when they actually do select the questions they're going to answer, that they sort of skip past some of the ones that they've answered before or that are not as important, that are duplicates. But yeah, hopefully they're able to get to some that are like yours. Mine that I had submitted were actually just, yeah, I wanted to know more about this developer side, as we were talking about earlier. Any kind of, as you were saying, a mission product update from CARP for the long term, because right now the only guidance they've given or outlook for the long term is just their financial growth rate
Right.
on the revenue side. And then also, I want to know more about Foundry for Builders and if they can expand that and just make it public, because I know
Right.
they've been doing a lot of work there. That would be huge. These questions, like, I'm grateful to everyone that has upvoted them. And I'm not saying these are the best questions or whatever, but 3,000 votes compared to about 26 is it might be a little far down. We're gonna keep going for a while.
I like
But
where your head's at, though, Jackson. Your questions are very, very on point, and they are the kinds of questions I'd
thank you.
also like to see them answer.
Hopefully they will be pretty purposeful about which ones they select and choose to answer instead of just taking the top 5 or whatever, which I'm sure these are pretty good, except for buybacks on outstanding shares. Like, there's a reason they're issuing the stock-based compensation. This is something you ask them when they're much more of a mature company with tons of cash. But yeah, that's just my opinion on that. Well, wrapping this up, this has been extraordinarily helpful to get the technical view of things. I think it'll definitely be interesting to see what happens, what number they were able to post top line. That's what I'm most interested in. And yeah, just getting your thoughts on macro, Palantir. This has been awesome. Thank you so much for joining me.
Thank you for having me, Jackson. I'd be happy to come back after earnings, and maybe we could do a recap and talk a little bit about what our opinions are.
Yeah, definitely. We can do it on your channel as well. I'm happy to join you. And I know you do a lot of Twitter Spaces. Your Twitter is absolutely huge and well deserved.
Thank you.
So yeah, look forward to engaging in the future.
Let's keep this conversation going, and let's talk about doing a recap after their earnings and sharing our thoughts there and trying to help the community as best we can.
Yeah, absolutely. So you're right here on your YouTube. So shout that out. It's Markets at Mayhem, and then your Twitter is the same as well, right? Any other
Yeah,
projects?
it's Mayhem #4 Markets on Twitter, Mayhem 4 Markets, and then you can always check my website out. It's marketsandmayhem.com. And then recently I started up a project with my friend Mitch Gandolf called Trader Aid, where we're helping investors and traders who want to improve their skill sets and get better results and be more consistent. And that's TRADERADE.com.
Great, amazing. Well, thank you so much.
Thank you, Jackson. Enjoy the rest of your weekend, my friend.
You too. Bye.